the three things that have set up perfectly for this. And I was talking with Daniele yesterday just about this, and I couldn't believe his excitement in here. So I'm joined again, as always, with Mr. Tim Basco, who's our Chief Executive Officer and founder and Chief Architect of BlockCerts blockchain. Good morning to you, Tim.
Great to be here, Dan. Great week in the world today of evolving technology.
Yeah, huge events happening here. So
huge
great.
Events,
and then Daniele Mincy, who's the president of Fusion STX and Fusion Funder. And being a crypto guy and exchange guy, huge week for you and what's been happening. Good evening to you. You're coming to us live from Rome, Italy.
Thanks, Dan. Good morning for you. Good afternoon and evening for me. Yeah, great being here as always. Great.
And I'm just going to share just a quick screen here. And someone said this past week that cryptocurrency is now a multi-trillion-dollar industry, but that's something that you and I talked about yesterday, Daniele, that is a multi-quadrillion-dollar segment. Add the 3 more zeros to it. Right. Who knows? But it's amazing what happened. And the first thing that we want to talk about here, Tim and Daniele, is how crypto has really gone mainstream in the IPO world with Coinbase. And investor Ron Conway, who's an early investor in the crypto economy and then also in Coinbase, is calling this the next multi-trillion-dollar opportunity.
Look at all those people without masks there, Dan.
Yeah, what's going on there?
On Times Square. What the heck, guys? Wear masks. Come on. We got to get over this crisis. This Coinbase thing is bigger than $86 billion, which was their market cap. The reality is, and I couldn't be more thrilled, I'm a fundamentalist. And Daniele has been following the crypto market and is very much, he was telling me a story this morning about some people that say, I really don't understand this. Well, let's talk about something. This is an age of discontinuance. Discontinuance being that we cannot continue to go down the paths we've always been on and expect to create anything out of the box, anything new for where we're at today. End of story. And will you understand it all? The answer is absolutely not. But there are those of us that have been at this for a decade or more that do understand it. I had another conversation yesterday about our company and a really great observation of traditional money wants to encase opportunity so they can consolidate it and put it in a box. I think what's interesting about this Coinbase situation and event is Coinbase self-listed on NASDAQ. They said this is pioneering following Spotify. Well, yes and no. I did it in 1994. Okay. I self-listed on NASDAQ in 1994. So it's not that pioneering. It's good marketing, believe me. And I agree with the way they did it. But I did it in 94. Anybody wants to hear that story of up and down, happy to share it on another webinar.
That's another 20 minutes.
That's a long story.
Yeah.
Secondly, they did consolidate around a centralized exchange. And what we've seen is this fundamental valuation now in the traditional world of what a blockchain crypto exchange looks like. So now we've got a foundation, a fundamental foundation. We also, because of the way the rules are, see a disclosure. How much are they making on a quarterly basis? I believe it was, what was it, $1 billion in the first quarter or something like that? So we've got fundamental.
1.8.
1.8 billion in the first quarter.
56 million users.
So yes, we do have fundamentals, 56 million users, 1.8 and so forth. What's interesting is we've now, Fusion STX, which I'm going to quiet down on for a moment, have started to see what Daniele and I have been talking about for over a year and building for over 3 years now, which is this merger of traditional and new technologies, new business models. We've been seeing that. Now we have some fundamentals. So all you traditional guys out there, congratulations. You can now come and say, what's that worth, Tim and Daniele? Because we can answer that. And we can show you trajectories based on that. So for your comfort levels, that's great. But this is a discontinuance. It won't stop here. It's starting here. And the valuation of these models is very much established. Our model is very simple. Same thing, same kind of technology, different market. SaaS and fintech. That's where we're at. SaaS and fintech. It's very simple. We're the fundamental guys that make all that stuff work. They're the guys that trade it. They're a secondary market. We're the guys who create the businesses in the market. So it's an exciting week for me, Dan, to be able to see the merger of those things, and also the market actually to catch up to where I was in '94 and start making that a traditional way of IPOing on exchanges. So with that, Daniele, I'm anxious to hear about your side of the story. But for me, it was a great thing to watch. And congratulations to the Coinbase guys. You made a bunch of money. Hope you make a bunch of difference in the world now. That's what we're trying to do here. Really happy about seeing how this emerged.
Yeah, thank you, Tim. So then I'll touch base about Fusion Funder at the end of my little introduction. But I think we are observing plenty of things that is worth mentioning. Point number one, I think the era of the let's say fundamental macro assessment of any stock to evaluate whether it makes sense or not to buy or to wait, or whether there is a correct valuation. So looking at kind of PE ratio, it's over for companies like Coinbase. If you look at the PE ratio of Coinbase, it's $210. So there's no comparable.
Right.
$210. So how can typically you discuss when you buy something in the stock market between 10, 20, 25, it seems to be, whoa, it's very expensive. So here we're talking about 210. So there's no reason.
What was the PE ratio of GameStop?
I have to check. But, yeah, that's why I think GameStop
that's the PE ratio. There you go, guys.
Correct.
There's your valuation model.
Yeah. So this, for me, this is the beginning of what we have been telling for, since, at least last 12 months. So the PE ratio like reasoning is no longer applicable to new business models. So, and then people were saying, so I got an interview this week and they were asking me, what is new in the business model of Coinbase? It's very simple. They don't have a product. They're built on a network effect business model that people don't understand. So the Metcalfe law, it's something that people struggle to understand. And this is where we are in Fusion Funder. We haven't even started to launch this strongly network effect model. The network effect essentially is the value that you create by meaningful interaction that happens within the network you're building. And it's not linked to the product, to the earnings of the product, to the earnings of the business units linked to that product, as it used to be back in 2000 once Amazon was launched, or even before, 1990 something, 1994, 1995.
99.
Yeah, correct. So people in the stock market industry still think in a kind of traditional fashion, PE ratio like thinking, as I used to call it, thinking about the product and the growth of the product and the distribution and whatever. There's nothing about it. We're living in a my point is no longer, I wanted to say this to give a name and a perspective. we no longer live in a PE ratio valuation era. We're living in an exponential era. Better we understand how does this work and how can we step into it early stage.
It reminds me of this old commercial I used to start when I was teaching finance to MBAs as a professor, and I used to use this in my MBA class, in this old FedEx commercial where there's a bunch of boxes stacked up and the company's falling behind, and the manager runs into this new guy's office and says, "Hey, we need help in shipping. Can you come down and work with us?" He's like, "Absolutely." And he comes down. He's the new guy in the company, and he walks down and sees all these boxes stacks up, and she sets him in front of a computer and she goes, "It's really easy. Just start typing here, and you can create these labels on FedEx and ship all these boxes out." And he sits down, and he looks up at her, and he says, "I have an MBA." And she goes, "Oh, well, then I'll show you how to do it." And that's really where we're at with Fusion. What we've been saying is, if any of you MBA and Genius analysts out there need any help, we're available. We'll show you how to do it. The point is that these network effect models are already proving out to be incredibly powerful. And it's hard to understand what the separation is and what the fundamentals are. This is going to affect pretty much everything from business fundamentals to GDP. What's GDP now? Gross domestic product. These elements, when we talk about discontinuance, that's what we're talking about. Shifting this paradigm to we don't know, but we can look at reference points and make assumptions of how to build new models that are very valuable. Would you agree with that, Daniele?
Absolutely. And then, Fusion Funder, for us, it's a hard fact. So as you all know, we have launched Fusion Funder months ago, and then we have created exposure for a bunch of companies that were bootstrapping different type of business model. We register several podcasts and webinar with them. And what it comes out of the launch of these different businesses is that if you have a business that is not built on a community and you have not yet built a market traction, it's very tough. It's very tough that people are looking at you with interest, okay? So that's proven. We have metrics to prove this. So how can we reverse this? So first of all, we have metrics to prove this storytelling, which is nice, but it's a hard fact. It's a metric, but we need to provide a solution for that. And how we believe to solve this problem, so very, very simply. So you have to have a business model that is built on community interaction. And if this is a model, it's meaningless to interact and to build a community. It's very tough. Right now, since we're living in an exponential age, it's very tough for you to be compared with comparable investments or with comparable opportunities for backers or for people willing to step into the project, being a stakeholder, to just attract interest, because people will compare against these opportunities that are going parabolic. That's why, to me, the Coinbase listing, it's such a nice story that will provide a huge effect, not only in the crypto-like industry. Crypto, it's pretty broad term to talk about an industry, because we're talking about the strongest technology evolution we ever seen with our eyes, and probably will ever seen in our lifetime.
And Daniele, it's interesting. I coined the phrase influenceonomics, and influenceonomics is really interesting. You brought up the point about how little people and companies, especially startups and I'd say large enterprise, understand about this idea of influence. And influencers are making a ton of money. And in the crypto space, you can go hire influencers and they'll go out and do the pump and dump scheme. So that's what drives marketing right now for the uninformed investor or the uninformed people chasing this. So there's a lot of noise in the industry. And then you get something like an Elon Musk tweet that says, I kind of like Etsy. And boom, the market valuation goes up $1 billion. Based on what? Where are the fundamentals? And what was the stake of that comment for that holder of those shares, if he was a holder, and so forth and so on? So these are the kinds of questions we need to start looking at if we're going to be removing ourselves from this rush to chase information, for lack of a better word, chase information and try and catch it. That's just Vegas. That's just pulling down the slot machine arm and hoping that when all the wheels settle, you're on the side of the jackpot. That's not the new fundamentals. It is part of reality, though, and it is part of what needs to be out there. So when business models are now literally fundamentally shifted by this kind of influenceonomics model, and the interesting thing to me and the metrics you talk about when we looked at it was who actually told a story that was getting traction versus who told a story that confused the heck out of people, and in a few minutes or seconds they left. That's really good market research and investment research. Like, don't ask, do I like this story? Ask, does the market get this to a place where they would actually even adopt investing in, or more importantly, buying or using that product? If you have a product that is telling a story that isn't engaging people on the front end when your CEO is sitting there talking to them, you probably don't have a business model that's going to get anywhere. It's too complicated. If you have, and take it from me, I've been that CEO with a too complicated business model people didn't understand a lot of times. Now, take a model that a CEO comes out and tells a story and it's pretty good, and you get more views and you get more engagement and you get people hanging around longer. Now, how do you optimize that to turn that into a monetization model? This is what every fundamental company should learn about the distributed business trustonomic. That's trustonomics at its most fundamental.
And if you run, Tim, this is a great point, because if you run this fundamental analysis on Coinbase, okay, so people, you heard on CNBC that the underlying value is mostly driven by the fact that is the only player in the world which is providing institutional grade like product and services. But then at the same time, I watched an interview with Brian Armstrong, which is the CEO of Coinbase. He was saying, well, we have a bunch of institutional clients. We don't even know how we monetize them for the time being, but they're on board. They're generating volumes. They're buying Bitcoin. So Bitcoin, price going up because of, buy pressure. We don't even know how we're going to monetize, but we don't care at the end of the day, because the market will grow and we will figure out. So this means the underlying value or the projected value of Coinbase is a projection of the entire market value, which can worth, hundreds of trillion worth of dollars, and no one in any comparable market can be valued at the same amount whatsoever by a factor of 10. So tell me one single company which has been listed at, in this case, NASDAQ, after I think they launched 2012, so 9 years after they launched the product and service, with a valuation of approximately between 50 and 100 billion, it depends how you calculate, being profitable by the time they launch, with a projected analyzed revenues of 7.4, 7.8 billion in revenues, being profitable since day one. I've never seen it, at least with my eyes.
Well, and I think that is kind of, again, being the fundamentalist, the redefinition of where we're at in the market and how businesses are run. I did a webinar earlier this week to a bunch of auditors, and a question came up. It's like, can we use this technology to manage accounts receivable? Now, we talk about microeconomics, but now we need to talk about the macroeconomics as well. And macroeconomics, now we need to talk about the micros and the fundamentals of finance and how this is going to reshape things. You know, we not only need to think about these big kind of measurements of valuation, but measurements of operation and how operations are going to change. So, for example, accounts receivable is no longer the same thing. What is Coinbase's accounts receivable? What's their day sales outstanding? What's their churn and their write-off for bad debts? Come on. I mean, you got the financials. It's publicly disclosed. Tell me what it is. I'll tell you what it is. Zero. It's real-time payments. It's real-time payments. This concept of accounts receivable management is a smart contract. The whole
days
business
outstanding.
of Coinbase, the whole business is a smart contract. It's real-time, fundamental. I provide a service, I get paid. I provide a service, I get paid instantly. That's why exchanges and trading and the money business has always been so profitable, or credit cards for that matter. They get paid at the time of the transaction from the transaction. Think about that. Where does the distribution or the leverage of the float go? It goes away. Now, is that realistic in our current economy? Is it realistic to say every business is going to pay cash for everything? No. Now we start looking at, okay, well, if they're not, where is leverage going to come from? And who's going to take that risk? Now you have a very interesting next market, which is the derivative of that, because you can trade that risk. Guess what? It's been there all along, just not as broadly available. That's been called futures contracts in the commodities market. So you have all these.
But since this week, Tim, so we have an evolution into the evolution at the same time.
That's right.
Because I hear some echo in the back. I don't know why. Because since this week, so traditional stocks, say Tesla, can be traded onto crypto exchange. So this means, and this is not a new financial product. Essentially, it's similar to a synthetic version of an asset, and which didn't exist. A synthetics protocol launched the first version of gold derivatives, but essentially you want to have derivatives on crypto and derivatives on traditional financial markets, and we're going to see in the coming months which one will be the bigger. So that's why we call it a quadrillion addressable market, because it's hugely exponential.
Well, and
Danielle, if you could just share a little bit about synthetics and what that really means, what that means for people. It kind of opens up a whole new market.
It's very simple. It's a derivative on crypto. Synthetic version of an asset is a derivative on crypto. Very, very simply. Okay. Synthetics with the X, as you see here, it's a protocol built on a blockchain, which is essentially a price discovery oracle protocol, which allow to track the behavior of an asset, say for example gold, and allow to get exposure to that asset without buying directly these assets. So essentially, you can combine as many layers of exposure to an asset with another one. We track the performance of that one, and the applications of this are infinite. So synthetics has been trying to track gold and silver performance, but then it has been mirrored this week on Binance, creating a kind of similar product. It's not exactly the same in the way it works. And they started to launch, they call it stock token on Binance of Tesla. And, Tesla stock price, I think, is about $700 per share. And obviously, if you buy the share on the stock market, number one, you cannot buy a fraction of a share. So you can only buy one or more. So multiple of shares. You can only buy if you're an eligible investor. So if you're a US investor, you have no problem. If you come outside from the US, you need to get access to brokerage platform if you're allowed to. And number two, you cannot buy with crypto. So in fact, what Binance and FTX or another exchange have been doing, they have called a kind of tokenized the stock. So it's not a security token. Essentially, they create a token. Let's say call it Tesla token, and this token track the performance of an underlying asset, which is in this case is a securities. So, and they've done this in partnership with a company called CM Equity AG in Germany. It's an asset management firm in Germany. So essentially, this asset management firm, so as long as someone is buying a certain amount of crypto to buy Tesla token, they buy the underlying asset at the stock price. And they try to track the two. It's not Binance that provide exposure. It's a third-party company, which is licensed to do so. And this is a very, very new setup that happened last week. And nicely to say, they launched a Coinbase token before Coinbase stock was launched. In fact, people were...
which is fantastic, because the other side of this is the idea of these underwriting syndicates that get all the pre-release shares and get to participate in the bump before it goes up. And I hate to say, in the late 80s, I did that a lot with my traditional firm, and to the tens of millions of dollars. So those were the pre-hedge fund days. That's where hedge funds came out of, is to be able to do this. Now we can create this open structure to pre-IPO investing, which typically has been closed. And a couple weeks ago, I talked about dark pools. That's what dark pools are. These ideas that people had to inside track get to participate. So it's becoming a more frank and transparent market. And all of this can be wrapped up into one word, something that I'm super excited that we're going to be, spoiler alert, announcing soon, is our tokenomics or financial engineering, with some really brilliant groups that actually do this and have been doing this for 4 or 5 years, building tokenomic models that allow for these different parts of business to be engineered in a way that you have distributed technology affecting fundamental functions, whether it be business functions or trading functions. And this science is new, but it's powerful. It's tough to understand initially, but it will create the metrics and the measurements of the future. It will create the firms of the future, and it will create the logical way to participate in the market of the future. We won't see influenceonomics go away. What we will see is a merger between influenceonomics, new fundamental tokenomics, and all of that builds trustonomics. The trust that you can say, I'm making a good business decision. So if Warren Buffett were here today looking at what are fundamentals, because he's always been a fundamental investor, he'd say, yeah, that makes sense. These Coinbase guys ran a hell of a good business, great business. And they figured out all of these tools. Binance is doing the same thing. All these great tools to build these enterprises that are truly worth, obviously, billions of dollars.
Yeah, and Tim, one thing just to note is that goodwill has always been on the balance sheet for big corporations. And there was an Edelman report that came out about trust just about a week ago. And one of the top 3 initiatives or components that CEOs and executives have stated is that communities and that trust is the most important thing to their business in moving forward and building and growing their business. So
And trust like finance or fintech, like digital assets. All of these things are big concepts, big words. Like
there is from a macro perspective, I think there is even one point more to mention, which is the debasement of a business model. So think about what is happening right now with the money printing or with the money supply, with the velocity of money going out very quickly and reaching out consumer at the speed of light. So what is going to happen? It's too complicated to talk about inflation. I don't want to touch this point. But I think what is going to happen, in any case, there will be almost an infinite money supply that will reach consumers very quickly, much higher than it used to be. Okay.
Right.
So obviously, this creates a rising inflation on the short to mid-term, whatever it is, how inflation is calculated. I don't really care for the purpose of this speech. My point here is that if you have, as we're going to launch, a business model which is tailored on a network effect, where the only index is the token, because the token is the unit of metric of how the community interacts and works and behave. At the end of the day, the debasement of that economic model is linked to the token, appreciation and depreciation in value. Okay, so this means every business model, and Coinbase, it's one, because Coinbase at the end of the day is linked very closely to crypto and to the debasement of BTC, ETH, or other tokens. So for us, there will be our own token in our own denomination terms. So this means we're creating, and companies like us and other companies, they're creating an economy of scale, focus on strongly network effect, where the unit of value is their own token, pegged eventually to other currencies, but still we are playing on a different league. So this means whatever is going to happen in the world, I'm talking about money supply right now, what we're doing here, it's playing on another field. So this means whoever is playing there is playing in an ecosystem where if it goes up in values because you're doing great. If it's going down because you're not doing great. Very simple as that. You're not kind of dependent of third-party factors. I think this is something we didn't experience before. Bitcoin first and to the Coinbase right now and their network.
Yes, and so to the extent that all of these models are evolving, I think what we saw this week was we saw a huge merger of the traditional and the non-traditional financial and economic models. We can certainly expect that this will continue, Dan and Daniele, as you know. We can certainly expect that there's a lot more questions. We're out of time, but at this point, super excited to bring at the world from here more thought leadership, bring on some people who really have more information. And with that, I think I'd like to just say, join us next week at 9:30. Stay safe, stay healthy, get digital. It's all happening on the digital markets. If you like our content, subscribe, click the like button, and please tell your friends about this, because you're doing them a favor to get involved in being digital.
Yep. So thank you, everyone, for joining us. We appreciate that you spend this time with us every Friday, wherever you're coming from around the world, looking at people that are going through our chat. We've got individuals from everywhere from Africa to obviously Canada, LA, all over the place, all over the world. So thanks again for joining us. And we'll do this again next week. We've got a lot of exciting things that we're going to be talking about in the next 2 to 3 weeks as we start our own countdown to what we're doing. So thanks again.
Stay tuned, everybody. Have a great weekend.
Thank you.
Thank you.